Yesterday, I told you OKLO was setting up for a massive bearish breakdown, and today I want to show you exactly how that call played out step by step, so you can see the strategy, the psychology, and the discipline behind a winning trade. No hype, no guessing, just real technical analysis in action. Before we jump in, make sure you like this video, subscribe to Gen W, and turn on notifications so you don't miss these pre-market breakdowns, because yesterday's call out turned into one of my highest risk to reward trades this month. This recap isn't about bragging, it's about credibility, transparency, and the psychology behind sticking to your rules. I show my wins and my losses because that's how traders grow. But today, this one was clean. Let's break down exactly what happened with OKLO. For the past couple of weeks, I've been calling out a head and shoulders pattern on OKLO's daily chart, which is a bearish reversal pattern. Last week, OKLO broke below its neckline at 110.75, and earlier this week, it kept rejecting that level. Textbook behavior before a further breakdown. In yesterday's pre-market video, I said I wanted OKLO to open below $110.75, break down, come back up to retest a key level, reject it, and that would trigger the short. And that's exactly what happened, with one twist. OKLO opened under the neckline at $110. Right away, it pushed up toward 110.75, but didn't quite hit it. I don't take trades in the first 15-30 minutes unless key levels are tested precisely, so I waited. Then OKLO dumped hard into the next level I called out, 106.65, and even hit 105 before bouncing. At that point, price chopped around VWAP, and I started noticing repeated rejections of the 5-day moving average. That lined up perfectly with the bearish structure we were expecting. Around 9:12 a.m. Central, I identified a 2-minute head and shoulders pattern forming in real time, with the right shoulder rejecting, again, the 5-day moving average. The entry trigger candle was an inverted hammer sitting right at VWAP. My rule is simple. If the next candle breaks below the inverted hammer, I enter short. If it breaks above the wick, setup invalid. At 9:16, we broke the low of that candle, we broke VWAP, and I entered 10 contracts of the $105 puts expiring 11/14 and 3 contracts of the $105 puts expiring 11/21 as a swing position. My initial stop loss for the day trade contracts was above 109. My swing trade stop loss was higher at 110.75 because swings need more room. Immediately after entering, OKLO flushed through 106.65 and back to 105. That was my first take profit zone, but the momentum was so strong that I held the full position. Once OKLO confirmed a new lower high, I tightened my stop to 107. That locked in the trade, so even a reversal would not turn it red. On the push to 103.50, I saw a resting bar form. The next candle failed to break down and pushed higher, so I trimmed half my position at 433, locking in more than 100% profit on each contract. As price pulled back to 105 and rejected it again, I tightened my stop to 105.50 and continued managing the runners. By 10:40, the move slowed and time decay started to kick in, so I trimmed more. My final 2 runners closed around 5 and 10 per contract. Here's the final breakdown. Total cost, $2,270. Initial risk, $270, with an initial price target of low of day, which was 105s, making risk to reward 1.5.1. Total locked-in profit, $2,151, a 10-to-1 risk to reward ratio. I also still hold the 3 swing contracts for next week, entered at $6.20 each. They're already showing green and still valid under my stop loss level of $111. Here's the key lesson. I didn't catch the exact bottom. It ended the day around $150, and that's okay. Nobody consistently catches tops or bottoms. What matters is sticking to your rules, trusting your levels, and managing psychology so you don't cut your winners too early. Everything I did, the entries, the stops, the trims, were rule aligned and based on the plan before the trade started. That's how you trade with consistency. If this breakdown helped you understand the why behind the trade, or helps you build more confidence in your own trade planning, hit like, subscribe to Gen W, and comment if you want more trade recaps like this. Transparency builds trust, and that's what Gen W is all about.